It used to be that investing in commodities was just for the super rich or the super foolish, but that may be changing. Tepid stock market returns the last few years have lots of people taking note of the fact that for nearly 50 years, commodity futures have outperformed both stocks and bonds. And that's one reason intrepid global investor Jim Rogers continues putting his money into things such as soybeans and sugar. He says it's time to educate all investors. That's why he's written Hot Commodities, How Anyone Can Invest Profitably in the World's Best Market. Jim, why should commodities be a part of anyone's portfolio?
Does everybody know that you used to be on the commodities floors? That you used to be
not.
a commodity trader? I know it. I want you to know she's good at all of this. Well, you know, Karen, as well as I do, that you can make a lot of money in commodities if you do your homework and if you're careful and if you invest properly. Karen, you know the study you yourself referred to showed that you would have made more money in commodities in the past 50 years than you would have made in stocks and bonds, and you would have done it with less risk, less volatility, and a better inflation hedge. You know that as well as I do.
Well, the bad rap the commodity gets, of course, is that it's so risky. Horror stories abound.
Karen, you know everybody's got a brother-in-law who lost his shirt in either soybeans or pork bellies or something, and that's because he didn't know what he was doing. He hadn't done his homework, and he bought it on very thin margin. He didn't put up much money. But you can buy soybeans the same way you buy IBM. You can put up 50% or 100% of your money, and you don't have to take those wild trading risks, short-term trading risks.
Well, we've already seen a really big move in a lot of raw materials. Steel up 106% last year, and in fact, crude oil, lead, aluminum, copper, any of those industrial metals were up double digits. Is there any bang left in this book?
Well, of course there is. There are going to be consolidations and corrections, and we're probably overdue for a consolidation in many commodities right now. But remember, between 1982 and 2000, we had a huge bull market in stocks. Well, there were some enormous setbacks along the way. But anybody who recognized that it was a long-term bull market in stocks made a fortune. That's what's happening in commodities. There'll be some setbacks. There's going to be one this year, I think, a big one. But take advantage of it. Buy more. Don't panic and dump. Buy more.
How can an individual investor get in on it? Not everybody has the deep pockets that you do.
Read Hot Commodities.
There you go.
That's the way to do it. No, what they should do is do their homework. Everybody knows something about sugar. Everybody watching this show knows something about copper. So start doing your homework. Find out the supply and demand. You can buy companies. You can buy futures, and futures are not nearly as dangerous as they're cracked up to be. I try to explain that in the book. This study you mentioned does the same thing. Do your homework, and you can buy. Or you can buy countries. Some countries are raw material producing countries. Canada, for instance, is going to have a much better economy in the next decade than the U.S. Buy Canadian department stores, buy Canadian restaurants. You know, find the countries or the companies that will benefit and buy them if you don't want to buy the commodities themselves.
Is there another way? Can you buy companies that either service or produce some of these commodities?
Well, you can, but the Yale study to which you referred demonstrated that if you had bought the commodities themselves, you would have made 300% more than buying the stocks. But if copper goes up, Phelps Dodge is probably going to go up. Phelps Dodge is a major commodity copper producer. But with stocks, you have to worry about management, balance sheets, unions, environmentalists, governments, stock market, lots of things. We all learn from Enron. It's not as simple as it looks. Copper is so dumb. If there's too much copper, it's going to go down. And if there's not enough copper, it's going to go up. Copper doesn't know who Alan Greenspan is, and it doesn't care where the New York Stock Exchange is located. So copper is very simple.
It's all about the supply and demand imbalances then that we see globally.
That's exactly it. That's why we have a new bull market in commodities. In the 80s and 90s, everybody was buying .com. Everybody was blah, blah, blah about stocks. Nobody was investing in productive capacity for commodities. There's been one lead mine opened in the world in the last 25 years. There's been no major oil discovery in over 35 years. Oil wells deplete. The production in Alaska is now in decline. Production in the North Sea is now in decline. England has been one of the great oil exporters of the world for 25 years. They're about to start importing oil. Karen, we're running out of this stuff. That's why we have a bull market. This is not rocket science. I'm not very smart. It's supply and demand, and it's simple history.
And we are seeing a bull market. We did a chart and figured if you put $1,000 in the RICI, Rogers International Commodity Index, and $1,000 in the S&P, where would we be? The RICI index would have shown a gain of $1,403, while you would have lost about $110 in the S&P. So you do see better returns, but there is a risk element, correct?
Well, every once in a while I do get it right, Karen. I mean, not often, but sometimes I luck out and I happen to get it right this time. Of course, there's a risk element in everything. There are going to be consolidations along the way, even if I'm right. If China has a hard landing this year, commodities will go down for a while. But there's a risk in everything. You think there's not a risk? Look at a chart of the NASDAQ for the past 5 years. Everybody watching this show knows what's happened to the NASDAQ and to Cisco and a few other stocks. It's a risk in everything, including bonds. Listen, I wish it were easy getting rich, but it ain't easy getting rich. You know that. Everybody knows that.
That's why I work for a living.
That's why you left the floor of the exchange, right?
That's true. Well, let's talk about China, because you see that as a very big market. And I was thinking of China in terms of cotton, talking earlier to you like, don't they export cotton?
Cotton, 10 years ago, China exported cotton, yes, but now China imports cotton.